Printing more money may seem like a quick solution to solving financial problems, but it's actually one of the main reasons why inflation occurs. When more money is introduced into an economy, it doesn't mean that more goods and services are available. Instead, you have more currency chasing the same amount of goods, which drives up prices. So, why does this happen? Let's break it down, and stick with me till the end. There's something very important I'll share about protecting your wealth. When central banks like the Federal Reserve print money, they're effectively increasing the money supply. Think of it like this. Imagine you have a pie that represents all the goods and services in the economy. If you suddenly have more people, money, wanting a slice, but the number of pies stays the same, the price of each slice will go up. This is exactly what inflation is. More money chasing fewer goods. You might be thinking, isn't it okay for the government to just print more money to make things easier? Well, while printing money can temporarily boost economic activity, it doesn't solve underlying problems. In fact, it can cause the value of money to decrease. When there's more money in circulation, each dollar loses its purchasing power. This means that the same amount of money won't buy as much as it did before. For retirees, this is particularly concerning because your fixed income won't stretch as far as it used to, impacting your lifestyle and overall retirement security. Now, here's where things get really interesting. If you're serious about protecting your wealth over the next 2 weeks, you should consider diversifying into something that holds its value, even when the dollar loses purchasing power. I'm talking about gold IRAs. Many retirees are turning to gold to hedge against the risk of inflation, and if you're serious about securing your financial future, I highly recommend clicking the first link in the description for a free guide on why thousands of Americans are opening gold IRAs. The best part? It's tailored for people like you, those who have worked hard to build up significant savings, whether that's $100K or even $5 million in an IRA, 401K, or savings. Let's get back to inflation. When money supply increases, it's not just the dollar that gets weaker. This ripples through the economy. For example, you might notice that gas prices, groceries, and even healthcare costs go up over time. That's inflation at work. It reduces the value of your savings, so that nest egg you've worked so hard to build might not stretch as far as it used to. That's why a gold IRA could be your best option. Gold has stood the test of time and has consistently held its value, even during periods of high inflation or financial instability. I know that some people think the stock market is a good hedge against inflation, but the stock market can be volatile. It's highly susceptible to the same forces that drive inflation, like interest rates and government policies. So, while you might see some short-term growth in stocks, the long-term security of your wealth isn't guaranteed. That's why many retirees who are serious about protecting their savings are now using gold IRAs to safeguard their wealth. And if you're looking to secure your future, it's never too late to make this switch. Here's the bottom line. Printing more money causes inflation by increasing the money supply without increasing the goods and services available. This leads to higher prices and a reduced value of your savings. But there's a solution. Gold IRAs offer you a way to protect your wealth from inflation and ensure that your hard-earned money is safe no matter what happens to the economy. If you have over 100Ks in your IRA or 401K or even 5Men Plus in savings, I highly encourage you to click that link in the description and get your free guide. This could be the first step towards securing your financial future. Don't let inflation erode your savings. Take control today.